Hello and welcome to Edukemy's YouTube channel. My name is Singh and in this video we shall discuss the featured news for today, 6th of May 2022, which is on RBI's report on currency and finance, RCF, report on currency and finance. Let us understand some excerpts of this report along with understanding what is the way in which India's economy will revive back. Welcome to all the participants here. Hi, I'm Lanhima, Bhabani, Ashish, Kim, Preeti, everybody else viewing in offline. Welcome to all of you. Let us discuss this now. Our economy is going through a condition which is very different from what we have encountered ever before. Not just India's economy, it is the global economy which is going through a turmoil these times. Possibly entering the phase of stagflation, and where there is stagnation in the economy and yet there is inflation as well. This is aided because of many situations like extraneous situations like COVID, like the war, like the disruptions in supply chain, because of which we have seen several things happening in the country. Now, the first thing that we saw was the slowdown. This was pre-pandemic itself. The world was slowing down after a huge boost in the global economy, and we started seeing this kind of slowdown in many sectors. For example, the real estate, the crisis in auto market, the disruption in technology which was happening, and consumer spending was decreasing because of all this. So this was pre-pandemic itself. 2018-19 government started to provide some kind of stimulus. This was not only fiscal, but this was monetary as well. Both of the level where government was giving some tax incentives and the RBI was also expanding its monetary policy. We saw that in yesterday how the repo rates, they were decreased so that there would be more expansion in the economy. But this was the previous times before pandemic, and right when pandemic happened, there was a complete lockdown of many systems. Example, school systems closed down for as many as around 600 days, one of the largest lockdowns that have happened in the on earth. Not only school, we also saw lockdowns of many other institutions, right? For example, there were institutions which could start working on digital mode, right? Offices. But then the manufacturing processes, the process where physical movement of people were required, for example, assembly lines, the process of mining and quarrying, the industries which had touch sensitive or touch contact, for example, tourism, for example, hotel industry, hospitality, all of them still received a lot of setback because of the pandemic. Along with that, we also have the marginalized population, right? For example, people living in rural areas, people who were migrant laborers, they were the ones who were at the receiving end of the pandemic. This was the second major impact. RBI report itself mentions very clearly. The third is the supply chain. There was a disruption in the supply chain because of different times of COVID impact, different times of Delta, Alpha and Omicron variant at different places, and resurgence at different times. It was never coordinated. So because of this, supply chain bottlenecks did exist. A simple supply chain bottleneck that exists right now as well, you can see around, is the presence of COVID in China. And Chinese economy now not being able to revive. So China is destined to grow at around 4% now. And China's economy growing at a lesser speed, this means heading towards a global recession. Because India's economy, even if we look at growth of 8%, this is good for India's growth, India's export. But then China is the country which exports majorly to the developed world, right? We have discussed this, $800 billion of trade to ASEAN, $800 billion of trade with Europe and USA, each of them. Now, when there is lesser demand from USA, when there is a lesser demand from EU, European countries, there would be naturally lesser production as well. But leave apart what is the demand from these countries, which are of course going to reduce because of the Federal Reserve's also contraction. Mr. Powell has he's increased the rates, spiked the Federal Reserve rates by 50 basis points. That means 0.5%. Just like India has hiked the rates, America has also hiked the rates. So their demand will reduce, and furthermore, China going through COVID impact, China's economy will also not do well. These are the times when we see supply chain disruptions at multiple places. A simple example through supply and demand, and you can place the example of commodities as well. Over and above, uncalled for, absolutely uncalled for, is the war. Right, so war, not only including the war that is happening in Ukraine and with Russia, we must also understand what are the issues happening in Myanmar, what is happening in Afghanistan, what are happening in African countries, and what is happening in South America, Venezuela as well. If we understand the situation of civil strife or war, we will understand that this has caused major issues of whatever less or more supply and demand that that region was meeting. That has resulted into further accentuating and aggravating of the crisis. And to add to the complete khichdi is the two Indias that we have, right? The vulnerable India and the robust India. The kind of V-shaped recovery we ought to look at and the kind of K-shaped recovery that we have actually seen. This is where, so look at the problems that we have shown here, right? The problems: slowdown, pandemic, slowdown before the pandemic itself, supply chain, war, the two Indias. See, every economy goes through a disruptive change, right? There are different kinds of unemployment. There is something called as cyclical unemployment. There's something called as structural unemployment. There's something called as disguised unemployment. So there is a time when people remain unemployed because of transition from one technology to the other. Now, when the whole world is moving to a digital age, digital technology, we are starting to see we need people with digital skills. Is it not true? Absolutely true. So people with conventional skills, people who are not able to transform themselves, they will be the one who will be left behind. So slowdown was also an impact of the transformational change in the economy. But then aiding with all this whole pot has caused a lot of trouble for the country and the whole world, to the level that the report says that India will take 13 years to recover from the impact of COVID. 13 years to recover from the impact of COVID and the snowball effect of everything around it. All right. Now let us understand what this report speaks about. One of the important ways in which report says India is growing is the agriculture sector. A robust growth of agriculture, 3 to 4%, even during the times of COVID distress. So resilient economy, we are expecting a growth of around 3 to 4%, and Indian agriculture has been growing 3 to 4% all the time consistently, aided with not just agriculture but the complete ecosystem of agriculture. So the forward and backward linkage, be it the fertilizer industry, be it the industry related to the availability of mechanized cultivation, all of them are also growing at a similar pace, which is a good sign for agriculture economy. However, what is concern that we have discussed previously is of the fact that it is a reversal of the economic structure. We wanted lesser participation of agriculture, lesser participation of people in agriculture, but there is more participation in the agriculture base, right? So this is one thing of concern. We have to reduce the percentage of people from around 45% to further less, because advanced economies use less number of people in agriculture, but yet we are reversing the whole change that we had in the last 15-20 years. The second is mining, quarrying and manufacturing. Have a look. These two industries is the area of concern. They need repair. The areas of mining, quarrying and manufacturing will need repair because these are the industries which got impacted. Manufacturing, see, if you remember, we had discussed in one of the editorials that Make in India scheme was initiated in the country. It did provide certain level of jobs, but it provided certain level of jobs only because before that time there was a huge cut off in the manufacturing jobs in the country. 3 million cut off and then provision of 1.5. So a small recovery, but the manufacturing share in Indian economy, it decreased from 17% to 13%, even despite the presence of Make in India. Imagine this. So that means we are expanding as an economy, but manufacturing base is still not getting provided for our nation. So this is where there is a need of repair. What can help in repair? The schemes like production linked incentive, the schemes for sector specific focus, the scheme for initiating help in MSMEs, right? Because a decent part of manufacturing is constituted through micro, small and medium industries. When we look at electricity, gas, water supply, this is the part of the secondary sector of industry. This also needs repair and help. A simple example provided in the report itself is the example of distribution companies, the power generation companies and the coal supply chain. You know it all. So this also needs support, right? So government support, providing schemes where we provide better distribution connections to people and more accountability from the consumers. All right, construction industry needs to recover well, right? This is where more of the employment will lie in future times, in these present times, right? Where agricultural jobs will be employed in construction sector because it does not need high skilled labor. But then there are some industries which are not recovered well, like hotel, transport, communication, right? Industries which relate to hospitality or tourism, see, still suffering. So one simple example of this industry is airline industry, yet to recover well. the industry related to this is hotel industry, yet to recover. So this needs a lot of support from the government end. When you look at the high-end services, for example, financial services, they are resilient. Have a look. Financial services, professional services, IT-enabled services, very much resilient. Why? Because they are catering to the whole world right now, not just India, but the whole world through digital services provision. All the economy that we had in office of the world, it has shifted to digital mode of the office. And systems like public administration, defense, all of them have been decently robust as well. Some of the services have been robust. Why? Because of provision of e-mode of services. So you can see which part of economy is doing well, which needs some help, and which are the ones which are still suffering. This is how the report it fragments all the different sectors of economy and talks about each of them. So let us understand what are the areas of concern and where is the focus required. One is liquidity, a lot of liquidity injected in the economy. See, all the content will be churned again and again till the time it's there in your head. And once it's there in your head, you will realize that it's only getting repetitive. And the content that is passed on as new content will be very, very less. So if you feel that some of the content is getting repeated, it is only because you have done it well, right? So let us quickly, it will be a good revision for you. Liquidity needs to be absorbed back, right? Well, the second one is Garib Kalyan Yojana. These kind of schemes which have had a lot of fiscal spendings by the government needs to look at curtailing them. The third is government debt. There is no mid-term or long-term plan for fiscal consolidation at all. The short plans are there. See, this is where the budget, this is where I had discussed the budget, and there was a huge criticism of the budget saying that the budget does not include the mid-term or long-term fiscal consolidation program. Budget does include flexibility approach. It does have the barbell strategy where we are using one mode for supporting of the economy and the other mode for ensuring that flexible approach is provided, flexible approach for growth of the country dependent on data inputs, and the other for having the safety nets for the vulnerable population. This was the barbell approach. But this approach dependent on short-term feedbacks does not have a long-term strategy. So we do not have a long-term strategy by which we are going to reduce the 75% of government debt. 75% of the GDP is government debt, be it inclusive of the central government and the state government debt. We don't have a plan for this. See, Sri Lanka goes through a debt of 120% of their GDP. Similarly, the European economies like Greece and all, they have 150% plus of debt, 150% of debt of the GDP. So returning back the finances is very tough. India should not be in a position like that. That is why fiscal consolidation, right, removal of the liquidity from the economy, lessening of these kind of schemes are very important. Similarly, we have to start working at privatization, asset monetization. Although we have started to meet some targets, but then these targets that we meet, they've already been reduced. The target for privatization was 1.5 lakh crore. We reduced it to 50,000 crore, I think 80,000 crore this year, and we were able to meet this target. So we need to start meeting this target. We need reformation in taxes. Today is one of the editorial is on GST reforms itself. Very simple editorial speaking about why we need to cut down on the different various percentages of taxation in GST. So tax reforms are required. Not only the indirect tax, direct tax reforms are also required, where the whole tax structure must be made very simple. Flat rate of taxation and no savings, no reduction in, there are various kind of cesses and taxes which are applicable, savings applicable. They should be simplified in direct tax code. Along with that, sector specific reforms must be allocated. For example, a simple example is fishing sector. Now, fishing sector has not recovered back since the time of COVID. The simple reason is, see, it is not just IUU, right? Unregulated and illegal and unreported fishing. This is also about the whole world economy and India meeting their demand. The economy of shrimps, fish cultivation is still reeling because of the impacts of One Health ecosystem. We feel that there must be better sanitary and phytosanitary measures of fishing sector, which India doesn't have right now. We don't have mechanized fishing as well. So this is reeling under pressure. Similarly, other sectors of economy, for example, many examples, you place an example and it's there. What we need help of, we need help in fab designing, right? We need help in defense manufacturing. Example, fab designing, example of defense manufacturing is best example right now is that of the the 75I project, right? Similarly, labor code, value chain, participation in global value chain. This is very, very important and critical for India, participation in global value chain. So when we look at the K-shaped recovery of the country, there are some factors which are aiding the K-shaped recovery, and there are some factors which are still causing the distress in the lower part of the circuit, that is the lower part of the K-shaped recovery. So items where there can be further amendments are generation of power, availability of better facilities for power generation, availability of land for carrying out business activity, manufacturing activity, having better availability of capital to people. Although RBI has presented this report, yet the ground level survey from private agencies speaks that availability of capital or availability of that money which was to be given back to the MSMEs, that has not been made available to them. Availability of capital by the banks has been further limited to people. So there are additional issues like technology and IPR, intellectual property rights, which need the presence in the country. See, along with that, there is a very important component, that is trade. What is the component of trade that we do as the proportion of GDP? I have shown this to you, but this deserves an attention here. The trade of as a percentage of GDP, we would be doing, earlier it was very less, it was less than 10%. And just around the times of globalization, our 12% rate of trade, the international trade that we do as a percentage of GDP, it rose to 3 times to around 50%. So 12 to 15% rose to 3 times around 50%. 50% of the GDP production and of goods and services that we do, we trade with other countries. This is where the relationship that we share, the free trade agreement, CISA, all that we have with other countries, this becomes very important. Participation in global value chain becomes important. So ignore what is about South Africa, just look at what is India's. If you look at developed economies, Germany, many other countries like Germany, Japan, China, their proportion of trade is very high as compared to their GDP. So this is why we need all that economic activity that we are doing. We need to create, not only we have a domestic demand, but we need all this liquidity decreasing, government debt decreasing, having sector specific reforms, having a recovery in land, power and capital availability, so that we are able to have better economy towards trade. All right. So this is how I would like to summarize the complete currency and finance report. See, it says 13 years to overcome the losses caused by outbreak of COVID pandemic. Right, the theme of the report is revive and reconstruct. See, this is not a formal report. It has been written by the members, however, and even the forward has been written by the officers in the RBI. But then, see, these are the contributors of the RBI, not a formal report from the RBI. So it speaks of the cyclical slowdown that is happening in the economy, which has declining consumption in the country. All right, global economic pressures causing the problem. We discussed this chart. We have a large surplus liquidity that needs to be withdrawn with calibrations. Fiscal consolidation is unlikely, and the debt to GDP ratio, we don't know when it is going to get reduced below 75%. The report suggests some measures in which economy can actually revive. So availability of low cost land, which is litigation free, having the quality of labor, reducing the cost of capital for industry, availability of capital, encouraging industry and corporates in participation. Are we doing all this? Yes, we are. Addressing the challenges faced by DISCOM, distribution companies of power, labor reforms, all these are required. On the other hand, what we need is state-of-the-art technology adaptation for all those sectors which are reeling under problems. Simple example is tourism. See, have we tried to create those roadmaps in which tourism is being provided through digital means? Yes, digital tourism is a part of it. So availability of the complete supply chain of tourism through digital means before the person arrives in the country, this is one way to go about it. So adaptability of domestic firms to state-of-the-art technology. Tourism is an example. Improving the technology, research and development in the country, right? N number of times we've covered this. Growing incidences of geopolitical conflict. These are the ways in which we must be of, these are the reasons of concern while we look at exports or the trade part of the GDP. Growing incidences of geopolitical conflict, we can utilize this, and we can also be reeling under pressure because of this. We are reeling under pressure because of fuel imports. We are reeling under pressure because of coal imports, because of excessive imports of some kinds. However, we are also at a very strategic position with regard to certain elements. Textile we can export, certain food commodities we can definitely export, like tea, like wheat. I wouldn't say it is in doubt. Please look at today's editorial, you will understand what I'm speaking of right now. India's ongoing and future FTA negotiations has a very important role to play, is India's participation in demand for the whole world. When China's participation is just 4% of growth, and USA, European economies are looking at India participation in the value chain. So we will have to participate in Industrial Revolution 4. We will have to increase the FTA negotiations with our countries. That's how we will have resilient growth in the economy. So question for today is, government and RBI have taken several steps to revive the economy from the impacts of pandemic. Elaborate, explain, analyze, critically analyze, discuss any of the points. You start mentioning 7-8 points, that will be enough. Each point with an example or some data that you have. Draw an illustration along with this. Start with an introduction or a conclusion. Right? Talk about those sectors which are impacted badly, those which are reviving well, those sectors which have had robust demand in the global value chain. And that will be your answer. Right? Question will never be on a report, but question will definitely be on India's economy. It has to be. Paper 2 will have a question like this. Paper 3 will have questions like this. So be prepared for all these things for the main examination. There are excerpts of this that you can utilize in a pre-exam as well. All right. Now, if you like this initiative, share some love, like, comments, and shares. Do view the editorials. They are very important. If I'm placing a question, there is a relevance. Every time we look at a question, we look at the video, and then we look at it from the perspective of what could be the possible question. We start exercising our minds, and that's where memory, that's where selecting of the words, that's where remembering certain examples or cases, this plays a very significant role. So while you are being an active participant here, if you engage more of your senses, right now you're engaging your input brain, but engage your output brain, engage your fingers, engage the memory, and that will definitely impact the way you are performing in your examination. This I can assure you of. So do view the editorials. They are not just meant for that day. You would find a lot of sense in those editorials for all times to come. That is why the effort is put in that direction. And if you like this initiative, share some love through likes, comments, and shares. I will definitely be sharing a couple of videos for tomorrow, and do view them. And that's where we will meet on Monday again. But till then, all you got to do is keep revising the content all the time. And right now we have reduced down the content as well. So good evening to all of you. Kim, Preeti, Amlan, Ashish, everybody else, good evening. Economy is going through inflation, stagflation, and shrinkflation. Imagine this. Shrinkflation, yes. Stagflation, yes. Inflation, absolutely. Call it as stagflation, no, rather than inflation. Okay, good night. Ambush from weather. Okay then. Good evening to all of you, and good night, Bhima.